Hi, in this session we are going to have our quick debrief on IAS 1. So this is about the presentation of financial statements. We'll just say presentation. So key things in this standard. It says that your financial statement should include a statement of financial position, a statement of comprehensive income, a statement of changes in equity, a statement of cash flows, and then you've got your disclosure notes. And where we might see this focusing in terms of the exam is we might see reference to whether things should be disclosed as non-current or current. So remember, current is part of the normal working capital cycle, so usually that's going to be a year, whereas non-current is anything more than a year. So again, remember when you're splitting loans, etc., you need to think about what's going to be payable this year and last year, and again for receivables, which will be current. Not only that, but you've got things like leases, and leases need to be split between current and non-current. Don't forget that whenever you're looking at each of the items and each of the adjustments that you're doing in the financial statements. Statement of comprehensive income. So remember here you've got your profit and loss, but you've also got your other comprehensive income. And again, this is a big issue. Other comprehensive income, what is it? Remember, this is things that don't hit the P&L. There's no real overriding rule as to why that is, but it's just certain standards say that this goes to other comprehensive income. It's usually for movements in reserves, looking at things like a revaluation of a non-current asset, foreign exchange translations, certain pension movements. Those sorts of things go to other comprehensive income. You can either have them combined or you can have them separate. Okay, so you can show P&L plus other comprehensive income giving total comprehensive income, or you can have your P&L and other comprehensive income separate. Statement of changes in equity. Well, that's just your equity. I think of that as a equity reconciliation. Statement of cash flows, just looking at your cash flows, and all the disclosure notes need to give enough detail so that it's relevant to the users. Other concepts that you should be aware of that the examiner may well focus on, accruals concept is in there. Going concern is in there. So these are just overriding concepts. You've also got to have comparatives. You've also got to have separate disclosures for things like if you have restructuring, impairment losses, material items, got to be disclosed somewhere in the notes or on the face of the financial statements. So look, the key thing on this is knowing the basics of what's included, but then knowing these key concepts: accruals, going concern, comparatives, separate disclosures for certain items. But again, something that the examiner has focused on in recent times has been this idea of exceptional items. There is no such term within IAS 1. It doesn't say, look, exceptional items should be disclosed within other comprehensive income or in the P&L. It just says these ones here should be disclosed separately, so restructuring, impairments, etc. It doesn't say that they are exceptional or use the terminology exceptional. So the examiner is really focusing in on presentation of the financial statements in terms of how that relates to investors, information that's useful to investors. So again, we're looking at comparatives being very important here. What comparative information are you disclosing? So you should at least be disclosing two of the full statements, so the P&L and statement of financial position, and those should be obviously in the same accounting terms that we did the first ones. So just be careful about how the examiner examines this. It's unlikely to be, what exactly is disclosed. It's more likely to be they're disclosing this. Is it the correct disclosure? And how might it affect the view that investors would take based on the financial statements? So that's the basics of IAS 1 and how it may well come up in the exam.